Hey, what's happening, everybody? It is Monday, May 22nd. It is time for another Monday Market Update. Thank you guys for tuning in. I have my cheat sheet here because there's a lot to talk about. Well, not a lot, just mainly one thing, but I don't want to leave anything out. It's very important information for everybody today. So first thing right off the bat, sellers. If you're sitting on a home and you're not going to be needing it this summer, you're not going to be needing it anytime soon, and you've been thinking, when should I time it? What's the timing going to look like? I'm just telling you, put it on the market soon. Rates are not doing what we thought they were going to do. The debt ceiling is causing a lot of issues right now. Inventory is going up every week. Prices are gradually stalling out. And since there's less people incentivized to buy because rates are not declining the way we expected them to, that means there's lower demand in pricing. Matter of fact, the 10-year Treasury rate today hit its highest mark since March 9th of this year. Which is when the yield was on its way down from 4% back in the beginning of March. So again, the stuff I said last week about how the rates were going down on Friday and then we go up on Monday, forget that. It all went up last week, fueled by the debt ceiling and the problems that we're facing there in negotiations, and Janet Yellen saying that possibly not be able to pay our debt when it comes due June 1st. I don't know if that's true or not. I don't know. It's hard to believe, politics, positioning, everybody says what they want people to believe, whatever. We talked about that last week, right? The crisis. Everybody creates a crisis to prey to our fears. So anyway, what's happening though is most investors now, because of the anxiety in the marketplace, the volatility, they're taking money out and they're putting it into like longer term bonds, maybe not the stock market. So they're taking some of their money, putting it into long-term bonds, 5-year bonds. And so what's happening to that is, people believe that the U.S. might be coming to default. Is that going to happen? I don't know. Last time it happened, I think, was 2011. And Moody's downgraded our rating, So AAA status to the lower status. So anyway, at risk, that increases housing. Prices will likely see a decline locally on the whole. Not a great steep decline, but we're talking maybe it'll stall out at best, maybe a decline of about 2 to 3% at worst. However, as I mentioned last week, fear drives our decision making. And with anxiety in the financial sector, it changes how people invest. Currently, you're seeing more properties that were purchased in the past 2 years by investors come back on the market in certain areas like 38111, okay? 38111, 60% of homes listed right now, 60% of the homes listed are not under contract. 50% of the homes in East Memphis areas of 38122, 38120, and 38117 are not under contract. But the suburbs aren't exempt either from this, okay? Bartlett fares the best, actually. 62% of the homes currently listed are under contract. So that's a reversal from 38111. Cordova, Collierville, Germantown are all at 45% of their homes listed remain without a contract. Arlington and Lakeland right around 50%. So in 2021, 2022, consistently you'd see 25 to 35% of homes not under contract at any given area, any given time. What that means is that inventory is double what it was during those days. So homes priced below a comp value. So, everybody finds a comp value. Okay, what is my home worth? Well, homes that are priced a little below that, it's actually, those are the ones that are selling. Those homes that are priced a little below comp value that don't really have any major flaws, those are selling, because you got to remember, appraisals are always rear facing. So when the market is hot, it takes the appraisals a while to catch up. And then when the market starts to stall out, it gets a little cool. Again, takes a little while for the appraisals to catch up. So it doesn't really matter what your appraisal or comp value is in the sense of like, I can get that for my home. Yeah, if you want to stay on the market for a long time, you could. But right now I tell people, hey, price it just below that comp value. Most of the time, it's up to your realtor, up to you what you want to do. I'd say 2 to 3% below what your comp value is really the price that's most attractive. Then you probably won't have to give up those concessions, which may have end up being more than 2 or 3% if you price it at your comp value and let it sit on the market for a while. Different strategies, different people. I understand that. I'm just telling you overall what's selling and what's moving right now. So it's not the homes that are like, well, see, my appraisal says I could get 360, so I'm going to price it at 365. Well, I mean, not really. Like if you price it at 355 or 350, maybe you get multiple offers and you get 360 for it, So something to think about. But if you price it over the comp value, you're going to sit for a while, and then more than likely you'll give up concessions greater than what they would have been had you just priced the home properly to begin with. But hey, that's a decision you need to have with your realtor. Don't take my word for it unless you want to come and call me. Perfectly fine. Otherwise, you need to talk to your people about that. So that's just some general information. Monday market update. Hope you guys have a great week. That's it for me. See you next week.